Good morning, everyone, and thank you for checking out this video. I know I haven't made one in a while. It's mostly because I have just been long-term investing and I haven't really added or taken away any new positions. But I wanted to make a video to kind of still show an update of my portfolio and continuously remind people that you can start off with a small sized portfolio. You don't have to take $1,000 and put that into the stock market and immediately use it all up. So when I say small account, I'm talking small account. So I started first with $100, bought a couple of stocks, 2 or 3, and then slowly added. I've only put in 3 payments, so $100 the first time, $35 the second, and then $30. So far I've only put in $165 into this account, and that's what I mean by small. So if you look over here, my account today, and today's a pretty good green day, has finally reached 86% return. So I started this kind of like experiment WeBull account at the end of last year. I bought in for Roku and AT&T at the end of last year. I don't know if you guys remember, but at the end of last year, pretty much right on Christmas and Christmas Eve, the stock market dropped. Mostly everything hit all-time lows, and that's when I bought in. So that's when I started this account. So mind you, I've only put in $160. And as you can see, my account is teetering at $340 right now. So I've done pretty well for myself. And that is definitely a testament to patience and timing and obviously research. So let me show you guys pretty much how things have gone for me since then. So as you can see right here, I only have one Roku stock, just one, but I bought it in at $28. And now that stock is at $162.73. So if anybody has been investing in Roku since the end of last year, they have seen astronomical returns. That is hands down my best performing stock. AT&T I bought in at the same time, same day as Roku at $28.18. And since then, this is an extremely conservative stock. The way that this stock has moved let me just put it this way, you're never going to have a heart attack by actually owning stock in AT&T. The movement is so conservative. It's not volatile at all. You can stand to get in at the wrong price with AT&T, and then through holding it, kind of double up on your positions when it hits lows. Like you have that time. Roku, on the other hand, kind of exploded. So that one was one where there's no way in hell I would buy another position right now. Maybe if it went down to something extremely small again, but at this point, like that window for me, in my opinion, is gone. So even though I love Roku as a stock, even though it is my best performing stock, I'm not going to buy another one right now. I probably won't buy another one for a long time, depending on how this goes. So that's my way of thinking about it. Instead of, I know that this is a good stock, why don't you, fuck it, buy something when, right now, when it dips, say it dips from 163 to 145, go ahead and buy it. But that's not how I think. There needs to be, for me, a major change in price. So what I look for when I'm trying to take a position on a stock is 13 to 15 to 20%. Like something bad happened. Somebody downgraded the stock, something bad happened in the news, a really bad earnings report in combination with a stock market crash, whatever it is. That's generally when I am looking to take a position on a stock. All right, so Coca-Cola is one that I've had for a while as well. So I bought in at $45.99. As you can see, that stock has gone up to $55.63. So these are just one stocks. Roku, Coca-Cola, and Bank of America, I only have one stock in. And the percentage return on those have already been extremely good. So I'm happy about that. Bank of America is one of my newest positions, and I took a position on Bank of America because I like dividend stocks, which is why I have AT&T, Coca-Cola, and Bank of America. Because if I'm just going to do one stock, if this is going to be a conservative growth type of portfolio, then why not focus on blue chip and also dividend? So blue chip meaning they're tried and true. They've been around. They've stuck through the test of time. They're companies that are large. Most of them, if not all of them, are Fortune 500 companies and things like that. They're names and they're names that have become trusted. Also, dividend stocks. Also, just plain and simple, invest in what you know. Everything I invest in, everything that is in this portfolio is something that I know. It's something that I understand. It's something that I can explain to anyone and everyone if asked, why are you investing in these stocks? So that's another thing. You don't want to invest in something you don't know. Don't invest in biopharmaceuticals because you heard that there is that chance for a really high return when you know nothing about biopharmaceuticals. Don't invest in tech if you don't care, use, or know anything about tech. Stick to things that you know. People drink Coca-Cola. People go to the bank. People buy cell phones, things like that. So definitely just stick to what you know and research those things intensely. So Bank of America I got in at $26.91, and that one is still so right now I made 44 cents from that. But that one's still one that's kind of teetering towards gains and losses. So right now that's the highest I think I've seen it. But like I said, I took that position in for a dividend. So there are, good and bad reasons for timing. Timing is always one of those things that you want to wait for. But with those more conservative stocks, like I said with AT&T, you have that time to really look at it, look at how it's moving, look at how it's behaving. And when you see a better chance to double up, then you can do that, which takes me into Aurora Cannabis. So that is my newest position. The one I have the most of. I have 4, which is still not a lot. It is technically a penny stock, and it's medical marijuana penny stock. And I chose Aurora out of all of the cannabis stocks because I like its valuation. I like that it's cheap right now. I do have that one's more of an experimental stock for the future. I really do think that as legalization and decriminalization and things like that start to take place in more states in the US, and we can already see that other countries in the world are just going ahead and legalizing and decriminalizing, I do see that as being a good investment stock for the future. But as you can see, it is technically my worst performing stock because I got in a little too early. So I originally bought 2 at $66.59. And then once I saw it go down, I bought in some more when they were valued at $1 less. So that's kind of my technique. I want the price to go down significantly before I double up. So in my opinion, don't just let that price go down about, 10 cents, 50 cents, depending on whether it's low cap, high cap type stock. Let it go down quite a bit. You can stand to lose a bit of money. You've put yourself in this position to possibly lose all of your money. So understand that losing money is a part of it, or losing, the valuation. And then whether you're the type of person that wants to sell at that point, that's something you can do. What I do is I choose to buy more. So I bought in 2 at $6.59. As soon as I saw the price go down to $5.59, I bought 2 more. This is a penny stock. If it were a $50 stock, maybe I would have waited for it to go down $10 before buying in again. But since this is a penny stock, I waited just till it went down $1, bought 2 more in. Now my new buy-in price is $6.09. If Aurora goes down from $5.64 to $5.09, I will buy 2 more, maybe even 4 more. And so that's kind of how we will get a better position, get that better unit price essentially, and kind of hold off for that pop that I'm thinking is going to happen. And that's just me. Please do not invest in Aurora Cannabis because I said I think it might pop. That's just me. So that is really sorry if this video is a lot longer than I intended it to be, but that's just a quick recap on this experimental portfolio. And I will more than likely, since I have finally actually used up all the money, I only have 86 cents of settled cash, I will more than likely add more money to this. There are a couple of stocks I'm looking at. And so if that is the case, I will absolutely kind of update you guys again with another video eventually. And I hope you guys enjoyed this. Please like, comment, subscribe to the page. And if you guys have any questions, please leave a comment. I'm not saying I know all of the answers, but I actually really like to look them up and kind of help anyone who is in a position of just trying to start off in the stock market. I think more millennials, younger people, entrepreneurial thinkers, more people need to be investing in the stock market and need to understand what it means and what are good, kind of techniques. So